Thanks for joining the call today. We'll go ahead and get started and take a look at what could impact mortgage pricing this week. Again, if you haven't stopped by the website in a while, be sure to check out the latest and greatest for our accreditation service. As you know, the Rate Advisory and Alert Service is part of that, and there's a free trial. Many of you are likely already subscribed to the service, but so many other benefits that come along with the accreditation and differentiating yourself and separating yourself from the competition to ensure that the consumer knows that you are one of the good guys in the business, of course, is the centerpiece. But many benefits have been added, so be sure to stop by. If you have any questions, please let us know. Let's take a look at the week ahead. It's a busy week in terms of data points overall, along with, of course, the very important data points. We have home price data points of consumer confidence. We'll have some employment with the weekly jobless claims, and then we'll also get GDP. So we get all the big ones this week, and it should make for an interesting week. On top of that, we have Treasury note auctions on Tuesday, Wednesday, and Thursday. Really, the risk, they're shorter durations, so they're expected to go well. The risk for mortgage-backed securities bonds is that they don't go well, and that would certainly impact mortgage pricing negatively. If those do go well, it would probably only really support mortgage pricing where it is today. And then through the week, we have a variety of Fed presidents speaking again, along with Ben Bernanke speaking. And while those aren't scheduled for release, the testimony and comments will certainly be picked up by the press and released, and traders will be watching those closely to take their cues. All right, so let's take a look at what we get each day and what you'll want to pay attention to. But again, all these data points are important, but we would caution you and give you advice on staying close to the note auctions on Tuesday, Wednesdays, and Thursdays at 1 o'clock, and the results of those are sure to likely, at least the 7-year note on Thursday, would have a direct impact on mortgage-backed securities. All right, so at 9 o'clock on Tuesday, we'll get the Case-Shiller Home Price Index. Again, an interesting data point. Price indexes typically don't move the markets specifically, but all eyes will be on watch. And the Case-Shiller is expected to show some improvement, and if for some reason it shows a slide backward, that could potentially help us a little bit that morning. But following an hour after that, we'll get our first reading on consumer confidence of the week, and that index is released at 10 o'clock Eastern. Again, the risk is that consumer confidence is coming in hotter than expected, and that could be negative for mortgage pricing. And then we'll get the 2-year note auction at 1 o'clock. Again, all these auctions are important, and even though the 7-year note on Thursday is the most important in terms of how it trades relative to the 10-year bond, all eyes will be on this 2-year note on Tuesday to get a sense of where potentially Wednesdays and Thursdays bond and note auctions will go. On Wednesday, and as you'll see here, we've made a note that Ben Bernanke is speaking on both of these days, Wednesday and Thursday. Again, nothing scheduled for release in terms of time, but I'm sure the press will be picking up his words and testimony and getting that released, and markets trade off that. So you want to be nimble both of those days. Really, the most important data, we'll get a new home sales data point. It'll be mildly important in terms of how new home sales tracked over the past month, but really at 1 o'clock, again, is the most important data point, and that will be the results of that 5-year note auction. And so stay tuned for that one. On Wednesday, we'll, of course, keep you posted with the intraday alert. And then Thursday, a big day. You get lots of stuff. You get durable goods first thing in the morning. So then you signs of economic health. First, then you get the weekly jobless claims, so you get a view of employment. And then at 10, you get a view of housing. So you get the housing price FHFA housing price index at 10. And then if that wasn't enough for one day, it'll follow up with the big Treasury note auction of the 7-year note at 1 o'clock. And so that could be a pretty volatile day. So you'll want to stay close to us and our alerts that day. And then Friday, we lead off the day with the first revision of GDP we had a few weeks ago. There'll be two more revisions, or 2 revisions total. So this is the first, get another in a couple weeks. GDP, came in at 5+% on that prelim data a few weeks back. If it's expected to be revised slightly downward. If it's revised a whole lot downward, that could be good for us in mortgage pricing, but it remains to be seen. And of course, either way, that's going to be an impactful data point. So you'll want to be aware of that data point for Friday if you're making a flow lock decision coming into that day. You also get the Chicago manufacturing data point, business health in that sector, in Chicago sector. So again, those are typically moderately good. Sometimes high impact. It just depends on how far the data point is outside of expectations. But look for that to follow along with just 10 minutes after that, the University of Michigan Consumer Sentiment Report. And we'll get that at 9:55. And then at 10, we'll get another existing home sales report, and that can be impactful as well. Again, that consumer sentiment, along with the one we get on Tuesday, all eyes are on consumer sentiment in terms of is the consumer feeling better about the situation? Are they coming back? Are they going to spend? Consumers make up 3/4 of that GDP number, and so all eyes are on consumer sentiment report, along with, of course, the employment data, because that has a lot to do with how consumers are feeling, of course. So that is the week. We would just caution you again, any week that includes note auctions is a big week, and that's really what spurred this the first jump in rates was 2 weeks ago when we had some poor results on the auctions. They were longer duration, but poor results in these Treasury note auctions can really back up rates in a hurry. Results that come in as expected, or bond Treasury note auctions that go well, can have a positive impact, but the risk for them right now is that they can have a much larger negative impact than they can have a positive impact. And so we're really looking at this week. There's a potential, if all lines up for us, that we pick up 3/8. It looks like there's a potential in positive mortgage pricing, but there's also a potential that we could lose as much as 3/4 if things go against us, i.e. Treasury note auctions and very positive consumer sentiment or other economic data points this week. So stay tuned. Be sure, again, if you're on this call and you don't have the Mortgage Market and Rate Advisor, be sure that you are subscribed to that, and be sure that you are not just getting the once-a-day or the once-a-week version. You want to actually subscribe to that service to be sure you get the intraday alerts. And especially this year, as we're going to be dealing with a lot of those note auctions, they will most certainly have an impact every other week on mortgage pricing, and they can be big movements, so be sure to sign up for that service. And again, we'll end with stop by and be sure to check out the accreditation program. Some of you are on the call may only be subscribed to the Rate Advisory Service, and just for a few more dollars a month, you can take advantage of the accreditation program that will help you differentiate yourself and separate yourself from competitors from the consumer perspective. So be sure to check that out. There's a whole lot of other cool things that have come along with that, along with the Certified Home Loan Advocate program that will not only give you a higher level of differentiation, but includes some pretty cool tools that will help you better sell, make more sales in 2010 through a Success with People program. So pretty cool stuff. Be sure to stop by the website and let Josh or myself know if you have any questions. And again, we feel a lot of emails and calls from you all through the week on specific days when you may have a critical float lock decision to make. We enjoy it. Be sure to interact with us. Shoot us an email. Give us a call. If you have any questions, we'll be sure to get back with you as soon as we can. Thanks for joining the call, and have a great week.